Hello, fellow traders. 'Tis I, the Rumpled One. It is December the 29th, 2016. It is the last trading day of the year. So I thought I'd visit with you for a little bit here and go over the dashboard some more. And I want to talk to you about Wick Zones. Now, the reason I want to talk to you about Wick Zones is just because Wick Zones are really simple. I mean, you could, if you wanted, just load up a blank chart. Okay? A blank weekly chart or daily chart. And if the price is inside the wick of the previous candle, it's in a wick zone. And you want to trade out. Because very few times does price close inside the wick of the previous candle. It's just pretty much a rare occurrence. We had one here, okay? And then we had another one there. But for the most times, it just doesn't. It doesn't close within the wick. And you can just see that. You see here it didn't close within the wick. Okay, well we had one within the wick. But the point is that if it enters the zone, it leaves the zone. That's the thing about the wick zone. So you can see here, it went up, entered that wick zone, and then it exited. You see here it came down into the wick zone, and then it exited. And that's what we're looking for, is the exit of the wick zone on these trades. Now, this is the 2014 version of the wick zone indicator. And as you can see, it has a panel display. But what we can do now is we can go to the dashboard and we can get even more displays. And I wrote another indicator, the TRO 2017 Wick Zones indicator. And what it does is it'll shade the area on the wick zone area on the screen only if price is in the wick zone. So you can see here, and I've got this indicator loaded up 4 times here. 1, 2, 3, 4. Because I want to look at the H4, the D1, the W1, and the MN, the monthly, weekly, daily, and the 4-hour candle wick zones. And I also put a midpoint line because I like midpoints. If you guys know, I've been working with midpoints for a couple of almost 2 decades now. So once again, same pair, same chart. Okay, just different indicator. You see here, we're not in the previous day's wick zone anymore. And so, see here, we're not in it. So D1 wait. I have this for myself, don't be an idiot. Because if I take a trade and it's not in the zone, then I'm an idiot. Depending on which one. So you see here, if I was taking H4 trades, I'd be okay. But if I was looking for a daily, I'd be an idiot. But the one that I'm really interested in is the weekly. Because you can see here, if you catch a weekly wick zone trade, there's a lot of pips to be made. I mean, especially on some of these explosive moves. Now, we know the yen's been moving like crazy, but a lot of pairs have been moving like crazy. I mean, dollar Canadian's a good one. I mean, if you would have caught the wick zone trade going up or down out of that upper wick zone, you would have been in the money big time. See, we can drop down that right here. See, monthly. That's the monthly. Now, I'm not so keen on trading the monthly wick zone. I like the weekly and I like the daily. And for scalping and directional, I really like to look at H4. Okay? Because H4, if you catch that, once again, you can see there's a lot of pips to be had. Even if you missed out on this one, if you would have caught coming out of that lower area right there, those are pips. Lots of pips. I mean, you can see here that price was at 34.68. It's at 34.43 right now. It's over 20 pips. If you could luckily punch out right here, you would have put a lot of pips in your portfolio. So once again, talking about psychology and trading, I've been working with some traders over the phone, online. You guys know who you are if you're watching this video. And the one thing that I keep stressing, besides keeping it simple, is use one method and trade one pair. I mean, let's just cut down on all the variables. If you trade one pair and stick with it, if you could just do that for a month or even a week, you'll see that while you're in front of the screen, you are going to have plenty of trading opportunities. I mean, depending on what you're trading, I mean, if you were just trading the highest open trade, or if you're trading a Wick Zone trade, you say, you know what, you're going to do it on a 4-hour basis. Okay, I get up to trade the New York session, so basically I get 2 4-hour candles. I would have this candle and the next one. Well, as you can see right here, all I had to do was go short, taking at that level the bottom of that Canadian dollar H4 candle. And that would have been a short at 48. Okay. And the low of this candle, you've got open, high, low, close, is 24. That's 20 pips. 20 pips trading at my level would have probably put somewhere close to 1% in my account. And I like to do, I'm averaging a little over 1% a day. Not quite 2%, but somewhere around 1% a day. And that could have been just with that one simple trade. Now, if we drop down to H1, you can see it. Okay? But we're looking at H4. So if I'm just trading dollar Canadian, because during the U.S. Session, if there's any news, it usually affects dollar Canadian, because sometimes you'll get U.S. news and sometimes you'll get Canadian news. Sometimes you get both. The pair moves. It just does. Now, the other thing you can look at is, you see here, here's the monthly upper Wick Zone high. So it popped out right there. Let's see, the Wick Zone is at 35.87 and the high was at 35.97. So maybe you got 10 pips. Maybe you got 5 on that pop out. But then coming back in, that's the monthly. If you were trading this Wick Zone here and you went short and you rode that, we're looking at 35.87 34.36. It's about 150 some pips. So with the Wick Zones, you can trade the break out, but you can also trade the break in. Okay, you can trade the break out and the break in. You can go both ways at the line. See, once again, we're talking horizontal lines. We're keeping it simple. We're using one method, and we're just taking the trades at the line. And here at the midpoint line, once again, you can see how price cut through that line, cut through that line. See? And this is it. I mean, you don't need anything else on your screen. That simple. You know, you can take the TRO HL5 indicator and load it up, and it'll plot the same lines. I mean, you don't need anything fancy. I mean, you could do it on a naked chart if you want it. I mean, it's really pretty much that simple. I mean, here we go. Time frames. Let's put up a 4-hour chart. I mean, you can see what price is doing. I mean, if we just go with the candle color, see, it went up here, was in the wick zone, came back down. What color's a candle? It's red. What direction do you trade? Short. It's a no-brainer. I mean, here, candle opened, went into the candle body. In other words, it was leaving this upper wick zone, turned around, it entered the upper wick zone, so you could have taken it on a long trade. I mean, that's it. We're using one level. We're using the wick zones. No more, no less. But so many people want to load so many indicators on the screen. I don't know, maybe it's human nature. But to make money, which is the goal of trading, you really don't need that much. Why do I have the dashboard? Why do I go through all this trouble? Well, I can see here where opportunities are. It's like dollar yen. There's 2 wick zone trades. Okay? Pound franc, there's 2. I mean, look at the euro franc. There's 3 trade opportunities. Well, there was 3, but did you see how that one just went away because it popped out of that zone? And so with the TRO or TRO 2017 Wick Zones indicator, it'll only display the zones when price is inside them. So you can see here, because the main thing about it is I ran all the frequency distributions to get the statistics. Price leaves the zone about 7 out of 10 times. I mean, price just leaves it. It doesn't like to stay inside these zones. So you can see here, we've got it right now. Price is in the upper wick zone, the weekly. Okay, and it's about to leave it. So we only have a couple more minutes left on the video, but I hope you guys have a happy holiday. Hope you had a profitable 2016. I hope 2017's even more profitable. And the price is just, it's putting up a fight, putting up resistance. Now, one thing about this, just so you know, you see how that zone just disappeared? You don't wait for the candle to close. What you do is, when you're going long, you use the ask price. When you're going short, you use the bid price, okay? So you don't wait for the bid to get to the line, because if you do, you're giving up the spread. Now, as far as stop losses, which some people are concerned, when you're trading the wick zones, you can cut your loss this way, using the midpoint. If it comes back down to the mid and cracks it, okay, you were wrong. Or you weren't wrong, it's just the trade didn't go your way. So that's about where I would put the stop. And maybe what I can do is I could put how many pips between the midpoint. Now bottom, that means candle bottom. Low, that means candle low. Okay, just so you guys know. High means the high of the previous candle, and the top would be the close if it's green. Okay, and that one just got out of the wick zone. You see how it, and the reason it does that is so you're not an idiot. If you don't see the zone, you can't trade it, right? So, and also you can turn on the previous candle's high low. It's just sometimes, let's see, here, right there, previous high low, you can set that to true. And this is on the daily. So you can see here, it'll show